Jack, I have to imagine Clarida saying he doesn't anticipate negative rates is good news in your view.
Oh, yeah. It's funny. We're hearing a data-dependent Fed in a headline-driven market. And I think that we're getting a sense that perhaps this group of 17 policymakers are collective deer in the headlights. We've got this global nanny state in monetary policy where if you're a business owner and you can't make money in this market, you're effectively an idiot, because 10%, 1 in 10 companies in the U.S. now are zombie companies. They can barely cover their debt service. And so that's part of the reason why the Fed has to keep lowering rates and why the Fed can't raise rates. So what's happening is these companies are now crowding out profitable businesses from productivity, from raising prices, and from hiring people. Sears is a great example. Should have been out of business 10 years ago.
Right. Yeah, but to your point, then that's not new. That's not a Powell dynamic.
No, I don't think. I think anyone, Superman could be in that role and be faced with the same problem.
All right. So market implications then for that. Let me start, Jason. I mean, if you agree with this view that we're in this strange chapter of monetary policy.
It is unusual when you have basically full employment, inflation that's trending to or at target effectively, that you have a central bank cutting rates. Clarida's comments were interesting because he kept saying the word risk management. To me, that's the reason why they're cutting. They're at their basically at their mandate. The fact that he said other risks, global trade, inflation expectations coming down, and global growth has decelerated. That to me seems the bar is pretty low for them to want to cut rates at this point in time.
Meaning what? That they're done?
No, I think that the bar is low, that if you get any more weakness in the data or no improvement in the data, if we don't get sort of signs of an actual trade deal, there's a lot of optimism in the market that we'd get some deal between the U.S. and China. If we don't get that, I think the Fed probably cuts once more this year. I think they want to steepen the curve. They want to make sure the curve is not inverted. Once they get there, then they can say, all right, then we're really kind of data dependent. We step aside.
So back to your point about risk, or their point about risk management,
yes.
I guess.